So can you explain, Mike, what effect do you think the growth of indexing is having on financial markets?
So what you've done is you've increased the proportion of markets that are true, or the proportion of market participants that are truly valuation insensitive, right? Or price insensitive is another way to think about it. And as a result, what you've done is you've actually increased the inelasticity of the market, the ability for prices to change in response to relatively small changes in supply and demand.
Mm.
That's really the primary dynamic. You've removed that historical filter in which investors would react to higher prices by saying, all else equal, the information content that I've now received is that future returns will be lower. Therefore, I'm more willing to sell. For
Mm.
passive investors, you actually receive the opposite signal. As the price goes higher relative to other securities, it becomes relatively more attractive. It's presumed that there's information content there. And as a result, you actually allocate more capital to those names that have gone up the most.
Hmm.
So, what does the ultimate bad outcome for this issue look like?
Well, unfortunately, the way this plays out is that it looks like things are getting better and better and better and better. It's very much like the turkey, Caleb's turkey before Thanksgiving, right? Where it looks like it's most robust, where it looks like it's most richly valued, where it looks like the opportunity set is greatest, is right before actually you end up seeing a net redemption that plays the whole thing in reverse. Right? It just makes the market much more fragile in both directions. That's
Can you
really the
talk?
definition of inelasticity, right? A market that reacts, a price level that reacts much more violently to small changes in supply and demand.
Yeah, okay, perfect. That's what I was going to ask you to clarify. So when inflows are going in, that's having an upward effect, but when they go down, it's going to have an exacerbated downward effect.
Exactly correct.